From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 11th, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. Now, this week's news calendar is full of high impact news, and it is going to be most important that you use appropriate risk management strategies in all trade setups. Starting here on the daily time frame, USDCHF, we can see a little bit of a pullback here for this currency pair. Most early last week, we saw a rise for this currency pair, rising from the 9,800 level all the way back up here into the mid to upper 99. So a pretty significant pullback higher for the dollar franc last week. Now, Friday we began a little bit of a turn back lower again, and even today, since market open, we've seen a little bit of a continued pullback. This could be in advance of all of this high impact news that we have coming up this week. Not really today. We don't have a lot of significant impact news today. But as we go into Tuesday, and especially Wednesday and Thursday, take a look at your news calendars. There are high impact news going into those days. So this pullback could be just the market getting a little bit cautious on that higher impact news coming up later this week. So we're looking at that maybe not necessarily as a shift in momentum or downtrend, but just some cautiousness in the market, maybe pulling out of the US dollar just in case there's some significant movement on Wednesday especially. But it's pulling back. We're coming back into significant support, 98.95, 98.80. We'll be looking today, and let me zoom it in one time. We'll be looking today for support here into the purple shaded area. We've seen it before. Look at the red box back here. We've seen support here before. 1, 2, 3, 4, 5, 6 days there support. So not too hard to see that we potentially look for support there and another push back up towards the blue zone, just like it did there in the red box. Of course, a break above the blue zone, we continue towards parity. A break below the purple zone, even today, we could see it back into 98.50 or even 9800 once again for the dollar franc as we go through the next few days. Moving on over to the euro, we actually have a trade we've been holding for several days now, going all the way back to December 4th. We've seen over 100 pips of profit on this trade. We've closed some of the profit. We've protected it by moving the stop loss into profit. But it's still sitting there. I wanted to leave it there just in case we saw another surge in favor of the US dollar as we saw last week, down into 1.1730. It's pulled back quite a bit. Let's zoom it in on this. Well, before I zoom it in, look at the green zone, blue zone, follow it back. Look at the black boxes I've drawn on the chart. Resistance support, all inside those black boxes. That's important because that's where we are right now. Resistance at the green zone, support at the blue zone. So that's what we're looking at today. We're at the green zone. By the way, that's also underneath the 100 period simple moving average into the 1.1795, 118 level. So as long as it's underneath there, I expect resistance. A break above the green zone, we'll look for it to go higher for the euro dollar. Of course, back down to the blue zone is in favor of the US dollar, especially if we get a move like that on our interest rate news coming up later this week. Let's go ahead and move it on over to the GBP USD. Let's zoom it in a bit. Well, zoom it out one time first. The blue trend line has been an uptrend for quite a long time. Let's not forget about that. Black trend line shows us an uptrend as well over the past couple of weeks, but now we're falling right back down into support. Of course, we've had Brexit news that has caused volatility on this currency pair. We know that there's other things that can affect it as well. Falling back down into support, 133.40.15 is the pink shaded area. We've seen resistance here, and let me just put a couple of black X's here. We see resistance here, we see resistance here, we see resistance here. So we know that that area of resistance, 1, 2, 3 times finding resistance, becomes what? Support for us here for the pound dollar. Not only that, we're coupling it along with the black trend line. Zoom it in one more time. So we know that this pink shaded area where the black arrow is potential support. We've already seen it today. We know that the blue zone can be resistance. We've already seen support there. So if we're going to see a trending move today, I think we need to break through the pink zone. Breaking through the pink zone potentially leads it all the way back down here into the 32.40, 32.10 level, the green shaded area that you see below the market. So watch that. A break of this low 33s could see it all the way back into the low 32s for the pound dollar. Otherwise, staying above the trend line ping zone, a break back above the blue zone 34, we could see the beginning phases of a next uptrend for the pound dollar. Let's move it on over to the USDCAD. Take a look at this range that we've been bound up in here for quite a long time. Black box on the chart. Let's zoom in on that. So look at that black box. Resistance at the blue zone, 128.75, 29.10. Support at the yellow zone, 127, 126.70. And nothing really new at the current moment. Of course, if we're going to see an uptrend continue, what needs to happen? What's the imperative? It needs to break through that blue zone 129 before it will continue to go higher. Until it does that, the potential is it could take another run back at the yellow zone at the bottom of the range. Higher impact news this week, of course, the US dollar news with interest rates could send this moving pretty significantly higher or lower depending on how that news is interpreted by the market. At least right now, I think it's a difficult place to buy under that blue zone. If you're going to buy it, you need to get through that blue zone. Potentially an opportunity to go short if there's reason to. I don't think there's really significant reason to go short at the current moment. So maybe watching for resistance and reversal, but more likely a break and continuation higher for the dollar CAD. Moving over to the USDJPY, of course, we've been studying this long-term range, basically 2017, in the live trade room, bouncing around trend lines, really bouncing top to bottom multiple times. Red trend line never quite made it all the way down to the bottom of the range again. Now we're starting to move back higher. Let's zoom it in on that. There it was. Red trend line started moving lower, pushed underneath 100 period moving average, and then turned right back around and started moving back higher again. Take a look at this orange shaded area, 113.10, 113.30, basically where the current market price is. You see the two circles back here, resistance and support. So we know that the orange zone is a significant decision zone for the dollar. Again, zoom it in one more time. There's that circle back there, bottom of the black box, orange shaded area, 113.10.30. We know that one of two things is going to happen here. It's either going to find support and begin moving higher again towards the yellow zone, and we saw that multiple times back here on the left, or it's going to break through this orange zone and have further pullback. I wouldn't think that that's out of the question with the significant U.S. news we have this week, especially today or tomorrow. Seeing a little bit of a pullback to the purple zone, I don't think would be out of the question, but I don't expect it to happen unless it breaks through that orange shaded area. So sitting above the orange zone, we're at support. I don't think I would sell right now on top of that orange zone. History says that there's a likely support there unless it gets through it, like it did right there with that little blue candle is. So we'll continue to watch that as we go over the next few days for the US yen. Moving over to the AUDUSD, it's a downtrend. That's not too hard to see. Let's go ahead and zoom it in. The black trend line shows us a downtrend. We have hit down into the lowest low of the trend, 7,500, around there, 7,510. 495 is the support into the pink zone. It is hit there and now bouncing back up a little bit. Doesn't mean we're looking at trend reversal. Obviously, the trend is still down. And this means it's bouncing off the support low. There it is right there. Hit the support low Thursday, Friday, Monday. Now sitting just above 7,500 into the 7520s. But look at this yellow zone. Support back here, support here. That is going to be your intraday resistance, 7540, 7555. Don't buy it underneath that because there's potential that it finds resistance and bounces back down. So if you're looking to buy, of course, it would need to go back above the yellow zone or at least be back closer to the pink zone for lower risk and higher reward. Sellers, though, are likely pretty interested in 75, 40, 55 in case it's going to turn back down in the direction of the trend. And of course, the break of the pink zone looks for a continuation of the trend for the Australian dollar this week. And lastly, moving over to the NZDUSD, we've seen a pretty strong New Zealand dollar against the US dollar over the past, well, since market open, but we're still contained inside of our area of ranging, contraction, congestion, choppiness in the market. You can see it's inside that black box. So we saw it back here on the left-hand side inside that same zone. Orange, yellow, green, blue. We're just bouncing around in there. The question is, which direction will be the dominant direction after it finishes this? Will we see the market break above that orange zone black box and start moving back higher? Or will we see the market break under the black box blue zone and go lower? Until then, we're just kind of stuck in here, aren't we? Let's go ahead and zoom it in a couple of times. Squeeze it out like this. We are just kind of stuck in here. Never quite made it down to the blue zone. Now we have this significant rally, but we've seen rallies within this range before. The closer it gets to the orange zone, I think will be likely significant resistance, and only if it breaks above 69.60, 69.80 would I look for it to go higher. But right now, the yellow zone is very interesting for the intraday 69.25. But keep in mind, if it breaks 69.25, you're just looking at 69.60 as your next resistance. It's about 30 pips, 35 pips between the yellow and the orange shaded area. History tells us that the orange shaded area is resistance. So again, a break of 69.25, you're only looking at 30 pips higher into the orange zone if, of course, it breaks that yellow zone, which it hasn't really done yet. It's just challenging it. So it needs to break there. Then we're looking at 30 pips higher. If it doesn't break there, which it didn't do the last time we were here, right here, we could see the turn back lower again for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.